This week on Sylvia's Traders Lounge.
The easy money to make is buying breakouts. So what I look for is I look for stocks that are trading stronger than the overall market, right? So if stocks are making new lows and I got a stock that's making new highs, that's extreme relative strength, and it's something we want to pay attention to.
Sylvia's Traders Lounge welcomes you all to yet another webinar where we learn, trade, and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology. So thank you, Michael, for joining us again this year. This is our final podcast stroke webinar for 2022. It's truly an honor to have you back on the lounge. And we'll just start by you telling us how different it has been since COVID, because I think that's the last time we spoke to you.
It's been a couple of years.
Yeah.
It's been quite a wild ride, as you guys know, with the stock market and volatility. And we had a complete shutdown of everything and then slowly open things back up. And now, everything's kind of back to normal in terms of COVID stuff, but the markets sure still are trying to figure out where to go, right?
Yeah. So how has your trading changed since then?
So my trading has not changed very much. I mean, I have always really focused in on the concept of leaders lead. And so our goal is to find leadership stocks. And obviously this year, the market has not been extremely conducive to finding leadership stocks. So instead of having hundreds, if not thousands of names to choose from, that list has really, really shrunk. So there are less opportunities, but there are still opportunities out there if you know how to look. So.
All right. I think we can now get into your discussion for today. We're really looking forward to learning a lot from you.
All right. Well, what I first kind of wanted to talk about was breadth reading. So what I've got up on the screen actually is the New York Stock Exchange. It's the New York Composite Index. So it's all the stocks on the New York Stock Exchange. And what I have on the bottom is what's known as the advanced decline line. So it's the number of stocks that are going up versus the number of stocks that are going down. And you'll notice from the beginning of the year, which is up here, right, for the most part, the stocks were falling all the way until we got into June and July. And then we saw more stocks rising than falling. And we got that bounce in the market, which was really nice. But that bounce did not hold on. We saw breadth deteriorate. And then once again, we saw new lows put in a couple of months ago. And from that point forward, more stocks have been going up than going down, right? So as long as more stocks are going up than are going down, markets can't continue to break lower. So I pay very close attention to this because it's a good way of looking underneath of the surface at the health of the overall market versus just looking at the index itself. Right. So the last couple of months have actually given us a number of opportunities and some breakout and leadership names. And I kind of wanted to jump into that. But before we get into that, one of the things I've noticed a lot of people doing this year is trying to pick bottoms. Right. Picking bottoms is a very, very difficult thing to do. So I want to take a look at Tencent. So one of the largest Chinese companies, right? People that bought the dip here, then they bought the dip again here, then they bought the dip again here, then they bought the dip again. It's the only real way that we can, in this type of market condition, try to find a dip to buy is by picking fundamentals alongside of technicals, right? So I don't do almost any dip buying at all, but I did make one purchase this year really on a dip buying, and that was actually Tencent. I'm going to show you the day in which I bought it, and I'll explain why. I actually picked it up on this day right here. And the reason is we have what's known as kind of a waterfall decline. So if we look at the rate of decline, the rate of decline is like this. And all of a sudden we have this kind of straight decline. I mean, this dropped 50% in a month and a half, right? And this is an extremely large company. If you took a look at the value of Alibaba and Tencent, they both traded almost at book value, which means if you sold every piece of the company off and took what it was worth, that's what it was trading for, which is an extreme. So we had a decline that is straight down. It's the same thing. You've heard the term parabolic run up, where you have a stock that's going up like this and then it starts to go up like this. Usually that's your indication that, we're not going to be able to continue that kind of run. Same thing happens on the downside. So we got this big bounce. This is actually like 17% in 3 days. I don't chase things like this. I wait for the best possible entry. And so I was looking for a back test of this low zone. So I entered in on this day with a stop just below here, looking for that move higher, and I'm still in the trade. It's still gone up. But it's very difficult to make those dip buys. They work every once in a while, but as you can see, even from this chart, right, it happened many, many times where if you tried to buy the dip, you essentially got very burned. So if you're going to be dip buying, you need to be doing it in extreme quality companies that are trading at a value level where it makes a lot of sense from an investment standpoint versus a trading standpoint. I think that's some of the hardest money to make. The easy money to make is buying breakouts. So what I look for is I look for stocks that are trading stronger than the overall market. Right. So if stocks are making new lows and I got a stock that's making new highs, that's extreme relative strength, and it's something we want to pay attention to. So I'm going to take you through some of the trades that we've put on this year that worked. I'll take you through some of the trades that we put on this year that didn't work, and I'll take you through some of the names that we're still in right now. And you'll get a very good picture of exactly what it is that I'm looking for. So first off, I want to start with Eli Lilly. So what I look for is and Eli Lilly's actually given a number of trades. I'm just going to talk about the last one. I look for these ranges. All right. So this is a long period of time where a stock is essentially trading between two very clear defined levels. When it makes a break above one of those levels, either to the upside or to the downside in a bear market, right, I want to be in it, and I want to use the last key low as my stop, because what I'm saying is we're making higher highs and I want to own it as long as we're still making higher lows. Right. There's three things a stock can do. It can be in an uptrend, and an uptrend is very clearly just defined as higher highs and higher lows, right? That's an uptrend. You have a sideways market where you're kind of range bound and you're making similar highs and similar lows. And then a downtrend is obviously the exact opposite of your uptrend, where it's lower lows and lower highs. So what I'm looking for is I'm looking for that trend following where I am making a purchase on a stock that is making higher highs, and I'm owning it as long as it continues to make higher highs and higher lows. All right. So Eli Lilly gave a number of trades since 2019. The last one, the one that we took, is we have this beautiful range right here at this 280 to about 330 level. You can see it's trading in it from about March to September, and then we get our breakout right here. Right. So I want to own this as long as it makes higher lows and higher highs. So my stop and this would be underneath of this. And this is my upside target. Now, the way I get my upside target is I use something called fib extensions. I take the most recent low to the breakout spot, and it gives me three targets. It gives me 124, 200, and 300. Very simply, it's 1.24 times the size of the range. So if it was a $10 range, the first target would be $12.40 above the breakout spot. The second target would be $20, and the third target would be $30 higher. So that's how I pick the targets. So we get up right near those targets, we take that profit, and we move on to the next trade. First Solar is another one that we took a look at here this year. Right, we have the high that was put in back in last November right here. And we have a very clear low zone that was tested multiple times, right? So we've got, a test here, test here. This is obviously a very important level on this chart, all right? We get a move above. We get a move above this smaller range right here on this day. I'm waiting for a break to new highs. So I'm not buying this. I'm actually buying when we get that break to new highs. And I'm using this last key low, which is this gap. And I use that to get my fib extension, which gives me this target up here at 170. So it's another one of these where entries in at about 125, stops underneath of 85, targets 170. And we'll see that play out very clearly on the chart. Steel Dynamics. All right, we've got another one of these where we've got a beautiful range that's in play here. We can see it testing this, 88 zone for months. Right, we have a series of higher lows in here as well. So this means that buyers are stepping in sooner and sooner and sooner. And then we get that breakout there on earnings, on good volume as well. and I take the low for my fib extension to the breakout spot, and I get that target for a nice clean little trade there. Principal Financial Group, we have another one of these very, very clean charts where we have a very clear range between 60 and 80. It's been trading in it since last March, right? So this is 2 years inside this zone. We get a breakout right here at that 80 zone, and we do it on good volume, which is another thing that we pay very close attention to. We have good volume. A lot of times it gets that nice follow through. We use the most recent low to the breakout spot, and we get our target up here for a nice clean trade. Cigna Corporation, CI, right? Healthcare has been very strong this year. Another one of these where we have a very clear, right, range that has been in play. We get a high, like, so you would have had a trade last March in this, but I'm talking about the most recent one from July. We get a breakout to new all-time highs at 275, and we get that run up right there into that first target a couple of months later. You know, you'll notice most of these are somewhere between 30 and 60-day trades. And at the same point in time, if I pull up the S&P 500 at that point in time, the S&P 500 is trading down here. So I've got a stock that's making new all-time highs while the S&P 500 at that same point in time is down 20% for the year. That is a really, really good sign for the names that we're looking at. Another name that's showed up on the list over and over and over again this year has been General Mills, right? We have another very clean zone right here. We get our breakout at the beginning of this year, and it's just gone higher the whole year long. It never, even came close back towards this low. So it's just a continuing series of higher lows and higher highs. It's a beautiful uptrend. It's doing the opposite of what the market is doing. Extremely strong. It's definitely something that, these are the types of things you guys want to be taking a look at. EXTR, another, big kind of range here that plays out over the course of 8 or 9 months. You get a nice breakout. It happens in on volume. You get that big follow through here to the upside over the course of the next 45 days or so, right into your first target. Another really solid looking chart. Pepsi Company. Pepsi gave us a nice trade at the middle of last year, and it's given us another one right now. This is kind of why I pulled this up for you guys. You can see the original trade, but there is a very clear zone right here that we are trading above. So this could be that next breakout. This one is kind of right there at that zone. So if this was something that we were going to take for another trade, you're looking at that 180 zone. You're looking to kind of put that stop at 160, and you'd be looking for that 205 kind of area there. We got Scorpio Tankers, a shipping company, and you can see here, this is multiple years worth of trading right here to get to that new high at 38. It breaks out. It does it on big volume in the middle of this year, gives you that nice fib extension. It takes you about 2 months to get to that target. And you can see it has actually continued all the way up to the second target in this particular example. Merck, beautiful pattern here as well. Again, very clear range between like 84 and 96, makes a break, does it on an increase in volume, just continue to push straight up to that target. Let's see. Lockheed Martin from earlier this year. All right, we had the whole Russia, Ukraine sent the defense contractor right off in the beginning of the year. Clean break, did it on huge volume with everybody having, real big concern, big winner for the year, right? It doesn't get all the way to the first target on this first push actually, but usually, and especially when I'm trading these, if we get within, a couple of percent here of that zone, I'm usually taking profit. So that I don't, give it all back, but it does ultimately get to that first target. I think, personally, I got out somewhere in this zone in here. So those have been a look at some of the completed trades that we've taken. Do you have any questions on that before I take a look at some of the current open trades? And then I will definitely share trades that didn't work as well, because there is no system that works 100% of the time.
All right, so there's a question coming in from Travis. He's asking, when you're looking at the SPX, you talked about the breakouts of all the all-time highs and lows. So his question is, price action may create a minor channel, for example, the SPX example. So how then do you look at taking the breakouts from the most recent high to low?
Okay, so I am looking specifically for this particular trading setup. I am looking just to take those really strong names. So what I'm using the market for itself is not necessarily to trade. I'm looking for the direction of the overall market. So if we look at the S&P 500 here, right, over the last couple of months, we are in an upward channel. We are making higher highs and higher lows. So I'm using this information on the overall market to go, okay, now let me look to my leadership group and trade inside of that. So when we're in this market right here, right, I am not seeing a ton of those breakouts. So there have been multiple times this year where there have been a month or two where I hardly take any trades at all because I'm not seeing a lot of names break out when the market is pushing down 15% in a month and a half. So I'm looking for that turn back up, and the new high list will expand. So there literally was points of time this year where I had one name total on my 52-week high list, because I have a couple of other screeners around it as well. I use liquidity as well. So they need to be mid cap or larger. So 1 billion market cap size companies are larger, and they need to trade for me 1 million shares a day or more. So I do filter out a lot of the smaller stuff. I'm just really focusing on the big names. But there were times during this year where there was no breakout list. And if we go back to 2021 and the second half of 2020, some days I would have literally 1,000 names to choose from. So hopefully that answers your question.
Yeah. So ideally, you're a breakout trader from what we're seeing right now.
Correct.
All right.
The idea is leaders lead, and they continue to do so. And markets tend to trend longer than most people expect them to as well. So, if you take something like General Mills, which just makes cereal, I'm not sure a lot of people this year thought that it would literally go up for the entire year and just continue to make higher highs and higher highs, right? And that probably surprised a lot of people. At the end of the day, I don't really care what the company does or anything else. I'm literally just looking at the chart, and I'm looking for things that are trending, and I'm looking for things that are trending stronger than the overall market, because that's where our leadership is, right? And they last for a lot longer than people are expecting. And you could employ this system the same way on the downside. If you did want to short, you would be looking at those exact same patterns, but you would essentially just flip the chart. So let's take General Mills, for example. If I flip this chart, right, this is General Mills chart flipped upside down. What would I be looking to do? I would be looking to short this on a break of that range. And so you would enter in a short position on something like this here, and your stop would be back up here, and you get that beautiful little trade. The fib extensions work the same way, where you can take it from the most recent high to the breakdown spot, and you get your targets that way. So this strategy works both to the upside and to the downside. I'm pretty much just a long only trader, so I don't do a lot of shorting at all, which is the reason why I'm looking for the breakouts. But if you're looking for breakdowns, this strategy works extremely well also, because what you're doing is you're just finding things that are either in a clearly defined uptrend and going long, or in a clearly defined downtrend and going short. And as soon as that trend changes, you get out of your position and you move on.
Okay. Yeah, makes sense.
Okay, go ahead.
There's also another question that is coming in. So Travis is also asking if you work with lower time frames. I think you've already answered that, like you start from the higher time frames, but you can chip in on that. So he said that he noticed that you only take swing trades.
Correct. I mean, that's the majority of what I do. I do a little bit of day trading myself, but I manage portfolios for clients to retirement accounts. So I'm focused in on long only. It's also why I'm focused in on the swing trade versus the intraday stuff more so. But these patterns play out regardless if you want to look at hourly charts, if you want to look at minute charts, the same types of patterns play out. Obviously, the targets are a lot smaller. What I will say is if you are trading intraday, you want multiple time frames to align. And what I mean by that is if you're taking a look at the S&P 500 right now, right? And we're looking at the daily chart is over the last month or two has been moving up, right? But the weekly chart is clearly moving down, and your hourly chart is moving up, and your 5-minute chart is moving down. There's no confluence of those different times. And that's a trade that has a higher probability of not working. If you have a daily chart saying the same thing as your weekly chart, saying the same thing as your hourly chart, then everybody that's trading a weekly time frame is seeing the same thing. Everyone that's trading a daily time frame is seeing the same thing, hourly, and so on and so forth. So you have more people doing the same thing, you have a higher probability that that trade works, right? Because what you want is regardless of what the other people are doing, you want them all kind of doing the same thing. Because if all the weekly traders are buying, and the daily traders are buying, and the hourly traders are buying, and 5-minute people are buying, probably going higher, right? And so when you get a mix of those, and that's where this type of market becomes very difficult, right? You get conflicting signals depending on the time frame in which you're trading. So you need to be more careful in higher volatile times. The other thing that is definitely a good suggestion is to decrease your position size, because the size of the moves is much larger. And so if you keep the same position size in a higher volatile market that you were in a lower volatile market, you'll notice your P&L swinging wildly, which means you take bigger wins, but you also take much bigger losses. And the goal of trading is always to minimize those losses across time. So as things get more volatile, I decrease position sizing because the risk essentially goes up from that.
Yeah, so we can move on to the others.
Sure. So these are trades that are, currently open. So we can look at them. I mean, some of them are, very recently taken. And you can very clearly see, once again, I mean, it's the same type of thing, but these are examples of, actual actionable ideas at this point in time. So Boston Scientific, BSX, I'm going to back this up and look at it on a monthly time frame. This is a major level going all the way back to 2004 and 2005. So this is a 20-year breakout to the upside, right? This is a really good looking chart. If you look at it on a monthly time frame, you have an ascending triangle pattern breaking out to new all-time highs. So really, really big long-term level. Zoom in on a daily, you can see the breakout happening on volume. Their earnings have been, pretty solid here, given the world's, events. And, we've got that break right here. So, looking for on a short-term trade kind of a thing and move up into the low 50s. But if you're looking at it from a long-term investment standpoint, right, you need to give it to basically the most important low recently, which is 34 or whatever. But that's a really interesting looking chart. End phase, we'll take a look at this one here. Let's see back in on a daily chart. Right. This is given a couple of trades. So I was in this from this breakout on earnings with really solid earnings. Again, just completely divulging from the overall market. It got to the first target, but it's giving you another potential opportunity as well, because from this earnings right here, we very clearly have put in a box, right? So this is very clearly what's going on. We've started to push out of it a couple of times recently. You look for that to make a new high, and you can use that to kind of 60 zone, as that stop, and looking for that, kind of next upside target. So really good looking chart that has continued to be on that, list. ASO, you can see basically a year-long beautiful cup pattern put in play, solid earnings, big push up after that, very clean chart, trading up at those all-time highs. Got Halo Therapeutics, which pushed up right here. So you can see this was the highest close that it's had right here back on this last earnings, right? Again, another break, nice high tight flag. It looks like it wants to kind of follow through here to the upside, another really solid chart. ADP, right? Higher lows, as we can see right here, right? Making a break to new highs, looking pretty solid here. Monster Energy drink, right there at that 100 level. So nice big round psychological number as well. Look at that big clear range defined breaking out, like just very clean. That's the best part about this, is you can very quickly look at these charts and you can immediately see exactly what I'm seeing. There's not a whole lot of complexity to this system at all. It is very clean and clear. So here's another really good example. Flex making a break to new highs from a very clearly defined range. It does it down here on increased volume and continues to push higher. McDonald's, right, broke out to new all-time highs from a very long range, looking for that continued follow through. Another very clean chart. That's not what I wanted. WRB, clean break to new highs on volume. These are just very, very clear charts. PCAR making that break. Again, doing it on an increase in volume. CTVA, all right, this made the break. This was a multiple trade one where you got the break earlier in the year, it pushed up and nailed its first targets, and now it's breaking again. We've pulled back down underneath of this level, and so this is kind of why I wanted to look at this one last. It's from the open trades, because this is not what you want to see. You want to see it holding over that zone, but you're only wrong once it makes a lower low. So that would be back down in here. But that brings me to this doesn't work every time, right? There's no way any trading system will work every time. And so let's take a look at some of the names that haven't worked this year, because they do happen. So here's Dollar General, right? This is earlier in the year. This was back in April. You get that break to new all-time highs, and look at that immediate reversal. And it goes and it actually makes a lower low, right? My stop was back up in here because, again, I think I'm not giving it the entire range. Basically, I feel if it takes out the most recent low, again, it's not something that you want to own. But that is a big false breakout and a very swift and sharp move in the opposite direction. They don't always work. Utility companies, right? Earlier, you had like August and September. Saw a lot of utility companies making new highs, and then whoosh, right? Just completely gave it up. So if you're buying on that breakout, didn't work out so good, right? Yeah. Again, that's that zone right in there. And that's okay, right? If you size your positions right, you're not going to win every trade, and that is totally fine. But this is what it looks like when trades don't work out. So here's Camco, the uranium company, breakout, doesn't make it to target, and fails on you. Waste management, this break right here got me, came all the way back down. And you can see I've got alert set right here. I'm looking for it to actually make that move over 176. I'll take the name again if it sets back up again, right? This happens. Part of the reason why this happens is the way in which institutions work. So people can see that this is very clearly breaking out of a zone. And so say I'm an institution, let's say I own a ton of shares of Waste Management and I want to get out of the trade, right? I know if we're like on this day, if I just start selling, there's not enough buyers. You can see the orders that are in the market, and I know I'll drive price down on myself. So how do I get out of my shares at the best possible price? Well, I know if I buy more shares, I'll be able to drive it above this level, which will cause shorts to cover and will cause breakout traders to jump in and purchase. So they buy a couple of additional shares, you get that breakout, and they use the volume and the increased interest to dump their shares. And then all of a sudden you get that swift move in the opposite direction. It happens. It's part of the game. That's how a lot of times these trades don't work. And there's nothing wrong with that. We're still going to win a high percentage of the time, but that is the reasoning behind why this doesn't work all the time. And charts, you can use charts for your advantage, and charts can be used against you in that same regard. Here's Southern Company, SO, breakout right here in August, right? Tries to go, tries to push, and fails.
So, Mike, I have a question. From all the stocks that you have shown us, do you have a criteria that you use to select and pick the stocks that you trade in? Because we have over 500 thereabout stocks on, say, S&P 500. So what metrics do you look at to know I want to invest, or rather I want to trade in this particular stock? Or you have
yeah, I do. I have well-defined criteria. So I'm looking at stocks that are 0 to 3% below their 52-week highs. So that will show me all the stocks that are making 52-week highs. It'll also show me stocks that are really close to making 52-week highs, right? So take, for example, this one. I know this one doesn't work out, but this is the chart that I'm on. This will show up on my 52-week high list here, and it will show up most of these days. So I see this before it breaks out, right? Because it's close to that breakout spot. It's within that 3%. And so what I'm doing, and you saw it on a couple of the charts, I have an alert. right? I can come in here and I can draw an alert on this. So I just kind of right click, create an alert with drawing, crosses above, put my little note that I want in there. And now I've got an alert that's set, right? Right here, you can see it, that alert. So if this price comes up and crosses that, I will get notified. So what I do is every day I look at all the stocks that are close to that breakout spot that I like the charts for, and I draw those lines and I get those alerts. Now, when the stock breaks out, I'm looking for a couple of additional things because, again, as I said, in good market conditions, I might have hundreds, if not thousands of ideas to choose from. So how do I filter down? Volume breakout is important. So if I have two stocks that are making new highs, but one doesn't have an increase in volume and one does have an increase in volume, I'll take the one that has an increase in volume. I'm also going to be looking at the bigger picture. So when we look at 52-week highs, that doesn't mean it's all-time highs. So if we take something like, let's say, ExxonMobil, for example, right? I mean, that's been really strong this year. When I back the chart up and I look at it on a monthly time frame, it hasn't made new all-time highs. Right. So all of this run up right here, there's tons of overhead resistance. So I not only need to look at the weekly chart or the daily chart, I need to look at the big picture, because if you're trying to buy on that 52-week high breakout here, you're missing this overhead resistance that exists from 2014 and is going to make it a lot harder to keep pushing. Right. So if I'm choosing between two stocks, one is making new all-time highs and one is just making 52-week highs, I'm going to take the all-time high stock, over the one that's making 52-week highs. Now, why is overhead resistance a thing? I'll think about it from a psychology standpoint as well. Let's say you bought ExxonMobil back in 2014 right here, right? What's one of those things that people say when they buy a stock and it starts to go down? I'll get out when I get even. Right? That's when I get back to even, I'll get out. They go for big rides, right? And then all of a sudden they come back to even and they're like, I can get out even, I'm going to get out. So that's kind of why overhead resistance is a thing. It's because there's a ton of people that are trapped, they're underwater. And as soon as they get back into that zone, they just want out. They want off the ride, right? And so that is a selling pressure that sits there. And that's why kind of overhead supply is important. Another thing is people use that as if you bought in late, that's a resistance zone. I'm going to take profit when we get into it because I'm not thinking it's going to keep breaking out. And shorts also use that as a level to key off. I think it's too expensive. I'm going to use the most recent high as an area to key off of for my short position. So you have a confluence of those things happening at once. So 0 to 3% below 52-week highs. Then we look at it for volume. Then we look at it for all-time highs. Again, as I said, I use the volume screener as well. So I need stocks that have more than 1 million shares traded a day, so they're liquid. You don't have to do that. I also use the mid cap or larger, so $2 billion market cap or bigger stocks as well, as an important screening factor for my trades. And then I will compare things together. If we get 20 trades at a time, I'm obviously not going to take all 20 trades. I'm going to have to look at each of them on their individual merit and see which one has the stronger chart pattern. So, we talked about those ranges, right? So if you have a range like this, and that's the pattern that you've got, that's a solid chart when it makes a breakout. But what's a better chart? A better chart is an ascending triangle, and that's this pattern. And the reason is very simply, the bulls have been stepping in sooner and sooner and sooner. In this chart up here, the bulls are stepping in right around the same time. They let the stock fall all the way down to the same level before they step in and buy. On this one, they're getting anxious. Man, the stock was $20. I don't think it's going back to 20. I'm going to buy it at 30. I don't think it's going to go back to 30. I'm going to buy it at 40. I don't think it's going back to 40. I'm going to buy it at 50. And then you get the breakout. This is showing you underneath of the surface, you have the buyers are essentially winning the battle as is. And I think this is, in my view, my favorite chart pattern, right? Same flat top, the resistance is the same, trade it the same way as this. It's just this works out better than this. So if I see a stock that's got this pattern versus this pattern, I'm going to choose the ascending triangle pattern over the range pattern.
Understood.
Any other questions?
I don't see any questions unless there's anyone else who would like to ask. But yeah, thank you, Mike. At least we've gotten like, the reasoning behind how you conduct your screen analysis for stocks that you trade, and also the idea behind your breakout trading system. So thank you so much for that. Maybe you can take us through like one last example of what you'd be looking at today, possibly during your prep, if you do like a morning prep before you trade.
I do, but so what I'm looking for from a swing standpoint, I am looking for the closes. The close is what's important for me, right? So the open actually isn't important, meaning for a swing trading system, I literally can use the last 15 minutes of the day and pull up the charts and see if it's going to close over a particular level. But some names that were very close to that right now that I'm watching, HWM. It's an aerospace defense company. Back it up on a monthly time frame. You can see this is an important level for the last decade right here. It has been making higher lows. It is right in that spot where you could get that break. So I'm watching this one closely to see if we can get a legitimate close over 39 on an increased volume. If that were to take place, that would be a name I'd be interested in. CB is another one right here. It's trading up to that same resistance zone that it was back in March. You can see very nice high tight flag on this push. I'd be looking for a break over that 222. I'd be looking for it on volume. That would be an interesting name. And I think, well, this one did break the other day. So if you weren't in it, you'd be looking for that break over 81 and some change on TJ Max or TJX. Right, this made that break over 77. It's trading in this nice high tight pattern, right? So if you're not in something like this, you're looking for it to make that next push and make that next high. So those would be the types of things I would look at. And then during the day, I'll get alerts. I'll get maybe 3 to 5 alerts a day if market conditions are a little more good. I'll be watching those names. I'll look at them into the end of the day. And I will, be okay. This one is going to close over that particular level, so we'll go ahead and pick that up. Or this one isn't going to close, or this one doesn't have enough volume, or whatever the case may be.
All right.
So I see that you asked me about testing strategies. Back testing strategies is not something I'm a huge fan of. I know a lot of people like to do it, but what ends up happening is you end up fitting data to a past. So for you to develop the best system, you would tweak what actually might be better today to fit conditions in the past. The bottom line is we know that this type of trading works because leaders lead. If you go back and look at all of the best stocks in history, where do you find them? You find them on the 52-week high list, and you find them consistently. So if we're looking for leadership, we know it's going to work. It doesn't matter what environment we're in. That has always been true, right? Amazon, you've seen that name. I mean, obviously this year, not so good, but up until this year, you've seen that name on that 52-week high list every single year, month in, month out, week in, week out. Like those are the types of stocks that this helps you find. So I hope that answers your question. And we also know from the different chart patterns what the odds are of things following through depending on market conditions. So if we're actually in a bull market, we're in an upward market, and we're buying these breakouts from these patterns, we have a win rate over 70%. When we're in tougher conditions, that number comes much closer to 50%. But your risk to reward is about that 2 to 1. So it works out, even at that 50% number. So the market conditions make a difference on your trading as well. So you can back test a strategy, but if you're back testing a strategy for the last 10 years where you've been in a straight up bull market, how does it actually work during bear markets? You really only have 2 times in the last 20 years to test that against. One doesn't have easy monetary policy, one does. Then we've changed monetary policy, so you got to go back to the 70s. It's very difficult to figure those things out. So I would look at trends up, down, sideways, and see how it performs in those different metrics. But at the same point in time, take it with a grain of salt, because the past is the past. The same type of patterns play out again, but it doesn't mean you're going to have the same win rate. Doesn't mean you're going to have the same results. So careful with the back testing and over back testing, I should say.
All right. So as we conclude, maybe you can tell people how to get in touch with you or how to get in touch with your work. I know you normally post some chart analysis on your Facebook. Maybe you can mention
Yeah,
that
I
as
put it on Facebook. We also have I'll drop it into the chat, a YouTube channel there for my business, perspectivewealthplanning.com. You can also find me at perspectivewealthplanning.com. But usually I put out 4 or 5 of these a week. They're, 1-minute videos taking a look at something, really important at the current time. A lot of times they're looking at the larger things like the market or, a particular commodity versus individual names. But there's a lot of value there. And if you want to talk anything about stocks, investing, et cetera, feel free to reach out to me. I'm very reachable, and this is what I love to talk about. So thank you so much for having me today.
Thank you so much as well. That's all the time we had for today. And we'll send you a recording of this next week, as well as we'd love to host you again next year if your time allows.
Sure. Yeah, I certainly would love to. Everybody happy holidays, have a happy new year, and I look forward to the next time we get to talk.
All right. Cheers. Bye. Merry Christmas.
Same to you all. Take care.
All right. Bye.